Good afternoon. It's Jeffrey Christian and CPM Group. It's about 5:45 in the afternoon of 14th of September. I'm recording this for release on the 15th of September. I will be tied up with virtual presentations in South Africa from 5 a.m. into the late morning, so I'm pre-recording this. I wanted to talk about silver and the silver market and silver inventories. A few weeks ago, I spoke about this, and I expressed some frustration with all of the nonsensical misinformation that is spread about how the world's running out of silver and there's no silver left, and you're going to better buy it now before the price skyrockets. And solar panels are going to use 400 million or 800 million ounces of silver, sucking up all the silver that's around. Just incredible garbage. And I made the comment that the silver market is extremely well supplied, and I'm imminently confident that if someone came to me today and said, I want to buy 100 million ounces of silver, CPM Group could buy that 100 million ounces of silver and not drive the price over $30 an ounce. Probably we could do it without even driving the price over $28 an ounce. That's how much silver is lying around. And I thought about it because this week is Precious Metals Week in New York. And the CME Group, which runs the Comex and the NYMEX commodities exchanges, had its dinner last night. And the IPMI Metro New York chapter had a seminar yesterday where people were talking about silver, mostly PGMs, platinum group metals, but also a little bit about gold. I don't know that people were talking about silver, but the congregation of people from the real silver market and the real precious metals market in New York this week gave me the opportunity to talk to several people, one of whom has built a new depository for gold and silver and precious metals outside of New York City. Another one which has depositories in several locations and had bought extra land where it built a new depository about 5 years ago with the expectation that it might need to build a new depository at some point because there's so much metal piling up. Said, no, we had to build that second, or actually it was the third or fourth depository for them, the second depository at that location, within like 2 years. The flow of metal being stacked up, primarily gold and silver, is so large that we have seen really for about a decade now, maybe longer, a continual construction of new depositories to hold more silver and gold. There is enormous amount of silver available for investors. So I want to run through some of those numbers again, because again, as I've often said, I work in two markets. There's the real precious metals market, where I work with mining companies, smelters, refiners, industrial users, institutional investors, high net worth individuals, family offices, governments, and central banks, and others with large physical activity in precious metals. And then there's the bizarro market full of conspiracy theorists and people who tell you that solar panels are going to use 800 million ounces of silver within a few years, and we're running out of silver, et cetera, et cetera, et cetera. And I really like to spend as much time as I can in the real world and as little time as possible with the gonzo world. But I wind up with both. So this is the price of silver, and it goes back to 1976 or so, and 1975, and you can see two spikes higher. These are monthly prices, so you don't see the price actually getting to just about $50 an ounce, both in January of 1980 and in April of 2011. The price was there for a day, and then the price fell very sharply. And the price fell sharply because at $50, there's a lot of people who own silver. There were in 1980, and there were again in 2011, and there is again today, who at $50 say, I'll take profits. And I think I can buy my silver back at a fraction of $50 if I just wait a week or so. And that was the case in both times. Silver, the day after it touched $50, fell more than 50% in value. And it wasn't because the hunts went insolvent financially. That didn't occur for another 3 months or 4 months after that peak in silver prices. In April, the price rose over the course of April 2011, and then within a week was back down to about $32 an ounce. It's important to understand the history, the real history of the real silver market, and not the fabricated wishful thinking of the deluded few who want you to buy silver at overinflated prices. Now, investment demand remains at reasonable levels. It's not stellar. It's not as high as it was from, say, 2008 through 2012, 2013, when it got up to 140, 150 million ounces of physical silver being bought by investors each year for about 8 years. And at one point, it got up almost to 200 million. These are real numbers. This isn't like the fabricated numbers that marketeers put out with 300 and 400 million ounces of silver being used. These are actual figures estimated by CPM Group, which has been doing this in various corporate settings since the late 1960s, early 1970s. We saw silver investment demand fall very sharply after 2013, 2012, and it was very low. It got down less than 50 million ounces in a couple years. It picked up again. It got over 100 million ounces in 2021, and you saw the silver price rise. It pulled back in 2022, and the silver price on an annual average price actually came off a little bit, and it's rising again. It's probably about 80 million ounces we project for the full year. 2023 is only 8 months over, so we don't have full year figures. That's a projection, not an estimate. You can see from this chart that when investment demand gets over 100 million ounces, it tends to be reflected in significant increases in silver prices. And you saw that again 2 years ago, 2021. 2020, 2021. You will see it again when investment demand picks up again. And our expectation is that probably is going to be 2024, 2025. At 80 million ounces, investment demand is keeping the price in the $22 to $28 range. If it goes over 100 million ounces, you'll see the silver price rise further for a brief period of time. So that's the reality of how the silver market works and how the silver price sets. Let's see if I can advance this. I'm going to see if I can move it back. My computer has been acting up a little bit today. I apologize. These are Comex inventories. And in August, you had a lot of schmoozing on the internet about how Comex inventories were running out, and JP Morgan had sold 10 million ounces or whatever it was, and it was going to drive the price of silver crazy. Back in May, when we produced our silver yearbook for 2023, you had about 33 million ounces of registered silver inventories against Comex positions, and you had about 238 million ounces of total inventories, 33 of which were registered and the other 205 were eligible to be registered. They met Comex delivery specifications in terms of 1,000-ounce bars with certain purity by a registered, produced and refined by a recognized and registered good delivery refinery. By August 11th, when the promo were really going full blast about how silver was going to skyrocket at the end of August, those registered stocks were down to 31 million ounces, while unregistered or total stocks had risen to 249,000 million ounces. So you actually had seen a shift out of a couple million ounces in total out of registered into eligible, but you had seen additional silver being delivered into Comex recognized and registered depositories, but not being registered with the Comex clearinghouse. By yesterday, Wednesday, September 13th, the most recent day for which the data is available, registered inventories had risen to 42 million ounces, and total eligible and registered inventories had risen to 274 million ounces. So, not a big draining of the inventories. They're not running away. The promo boys like to talk about how total inventories had peaked at 400 million ounces at the end of 2020 and had fallen as low as 238 million ounces by May of this year. And how total registered inventories had gotten up to almost 150 million ounces at the end of 2020 and had dropped to only 30 million ounces or so. They failed to talk about how the ramp up from 2016 to 2020 was an abnormality in these inventories, and how that abnormality reflected investor disinterest in silver. Those inventories were rising both on an eligible and a registered basis because investors were extremely disinterested in silver. If I can go back to that supply and demand, you can see that period of time where investors were buying 50 million ounces of silver and then 40 million ounces of silver. And we were warning silver producers that it was starting to look a lot like the late 1980s, with investors really moving away from silver. And they were still net buyers, but they were not buying as much as they had been. And it was starting to back up, not only in Comex registered depositories, but also in other locations like London. So it's one thing to say, oh my God, look how sharply stocks have dropped. It's another thing to say, hey, stocks had risen to abnormally high levels because investors were not interested in silver. And now they've fallen back to more typical levels in terms of registered inventories at 30, 40 million ounces of registered inventories. You're sort of in the area that you were from 2010 after the Great Recession and global financial crisis through 2017. And in terms of total Comex registered and eligible reported inventories, we're down to 275 million ounces from 400 million ounces, and that is almost twice as much as the 100 to 150 million ounces that was a more typical level. So it's not that the Comex stocks are scraping the barrel. They're still extremely high. They're extremely high because a lot of people have been buying silver and storing it as opposed to using it. In London, we only have reported inventories since 2016. They were about 950 million ounces in 2016 when the London depositories and banks began collecting and publishing this data. They got very high into 2020 and into early 2021, and then they fell very sharply to 850 million ounces. And again, you saw the promo boys talking about how there was no silver. It was all going to Asia. And there was about 100 million ounces of this that did go to Asian markets both for fabrication demand and for our investment demand. There's no published data prior to 2016 on London inventories, but back in the day, in the 90s and aughties, and into the first part of the teens, the 20 teens, CPM used to estimate that there were 200, 300, 400, 450 million ounces of silver in London depositories. So even with this plunge of inventories after 2020, 2021 in London inventories, they appear to be about twice as large as they were before they started reporting these inventories. A lot of silver in London. Comex, I already talked about. London. Shanghai, you've got about 45 million ounces of silver registered with the Shanghai Futures Exchange. There is a lot more silver that is not registered with the Shanghai Futures Exchange in depositories spread throughout China. Unreported inventories, but they're there. Then there's 1 billion ounces in ETFs. And it's funny because people say, well, that's not really available to the market. But 18 million ounces of it has been sold so far this year, in the first 8 months of this year. So it's quite clear that some investors who buy ETFs are willing to sell that stuff. There's a lot of silver out there in the world. Meanwhile, let's talk about supply and demand. Fabrication demand has been rising in electronics and has been rising in solar. I'll show you a couple charts in a second about that. But if you look at total fabrication demand, it's been relatively flat for a quarter of a century. People say, well, why hasn't the silver price risen as sharply as, say, the price of copper, where fabrication demand has been rising for the last 25 years? And the answer is because copper fabrication demand has been rising for the last 25 years, and fabrication demand for silver has been basically flat. Yes, we've seen solar take up to 128 million ounces projected for this year in a realistic way, not the 400 million that you might have heard in a public bathroom somewhere. And electronics demand is rising somewhat. But photographic demand has basically gone from being the largest user of 250 million ounces a year 20 years ago, 30 years ago, to using less than 50 million ounces a year now. And jewelry demand has also pulled back, although it's much more cyclical, and it comes and it goes. So demand has been relatively flat for silver to be used in fabricated products. Investment demand has been stronger, as I showed you earlier. Silver use in solar panels, it really wasn't a major issue 25 years ago, but now it is about 128 million ounces a year and rising. Silver use in automobiles, which shows up in our total figures as electronics use, is about 35 to 40 million ounces a year right now. It's not larger than that. Mine production actually continued to rise into about 2015. It fell into about 2020. It picked up a little bit. Our expectation is that it will decline over the next 7-8 years. Secondary recovery also is projected to decline over that period of time, but not as forcefully. So we're looking at an 8% decline in total mine production between 2021 and 2031. And we're also looking at about a 4% decline in total refined metal supply, newly refined metal of silver, over that 10-year period of time. So a lot of silver is still around and a lot of silver is still coming into the market. And the reserves of mineable silver are at record levels. There's more silver to be mined that's known and identified reserves than ever before in history. About 16 billion ounces in 2020. And that's up from about 8 billion ounces 40 years ago, even though the world has mined 26 billion ounces in those 40 years. Think about it. You had 8 billion ounces of estimated proven and probable reserves in 1981. And there were people running around saying, hey, we only have 8 billion ounces of silver left to mine, because they didn't understand the difference between reserves and resources. We're going to run out of silver. And in the ensuing 40 years, we mined 26 billion ounces of that 8 billion ounces. And at the end of that period, where we've mined more than 3 times as much as we thought we knew we had in reserves in 1981, we have twice as much in reserves as we had back then. The world is not running out of silver. And those are in the ground to be mined and smelted and refined reserves. In terms of silver bullion inventories, both in bar form and in coin form, we have about 5.5 billion ounces of silver in refined form, not in fabricated products, not in jewelry, in bars and coins that can be sold at a moment's notice. If somebody says, wow, the price just broke over $30, or the price rose to $50, I think I'll take my profits. There's a lot of silver to be had. And if you're astute, you can buy it at $22.90 today, and you can probably buy 100 million ounces and not drive the price over $28 or $30. That's how much silver's around. Hate to be a spoilsport, but I try to help my clients make money, not lose money. We have an open forum for our clients next week. It's a question and answer period. It's next Wednesday, the 20th of September. It starts online at 11 a.m. If you're a client, you can register at info@cpmgroup.com. And you can also send us questions ahead of time, so we have a chance to parse good questions from bad questions, and also maybe formulate answers, maybe even pull together slides. We have no formal presentation in these open forums. It is a chance for you to come and ask questions of CPM Group's analysts about silver, gold, platinum group metals, and other related subjects. Take care of yourself. You can go to our website, buy our reports, learn about more of what we're doing, read some of our free research that is posted there, watch old videos. You can go to info@cpmgroup.com and ask us about other services, or register for the open forum if you're a client. In the meantime, take care of yourself and those around you. Try to do something good for the world. And we'll talk to you next week. Take care.